is really interesting in that, when you get this kind of setup where it's been, it's consolidating, essentially hitting the sort of 60-ish zone, and it's been going sideways for months, down, up, and then it creates this kind of triangle, and for traders, it's a technical trading pattern called an ascending triangle, and the probability of that breaking upward is quite high. I can't recall exactly what that is, but it is high. It's like above 66%. And so it's kind of, and it's a big one, right? It's going for months. So it's a really brain dead trade, because once it breaks above it, you've got a very high probability of it running. And so every time we got close to it, everyone went long on the derivative trading market. They went degenerate long. And so, of course, when that happens, it's very incentivized for people to take the other side of the trade. And so it really, right now, we broke it, but everyone's still very, very largely in long positions. So it's creating a lot of headwinds for us to move upwards. And so it hit the top. It's been testing. I said anytime in the next 2 weeks, this thing can break. And I actually meant it any time within hours to 2 weeks, because 2 weeks is where the apex of that triangle hits, and that something's going to happen. Typically what happens in these trading patterns is they hit these support and resistance lines, and our resistance was flat at whatever it was, 61, 62,000. And then we had this support line that's trending upwards. So as time goes by, it's going higher and higher and higher. If it breaks below that, then you kind of break into a new pattern. And but it wasn't. It was holding very easily, that price line. And at the point where the two lines converge, something's going to happen. Very seldom does it run out sideways. So that was the next 2 weeks, and it broke. We had that kind of degenerate long position stuff happening, and it created headwinds. A lot of traders like to counter trade it. If everybody's in long positions, obviously you can't stay in a long position for free. Just like, if you're buying a house on a mortgage, you're doing a long position on your house, essentially. You're just borrowing money from the bank to buy stuff you haven't already got. You're not actually paying for with real money, you're borrowing it. So it costs funding rates. And when those funding rates go really high, Mr. Professional Trader comes in and goes, oh, I can make, what was it? Close to 300% per annum by going short and holding the Bitcoins. So a lot of people start to balance that off by going short. And then people also protect that line, because what you can do is force the price downwards. And if you can force it down past a certain line in the sand, you can cause a liquidation. And it's just a trading strategy where you can counter trade everyone and take them home to the wreckers, essentially. So that's what we're currently doing. I think for you to think of it in a price discovery, the market's a price discovery mechanism. And you've got long-term buyers coming in. Whenever it dips, someone buys the dip and says, I'll take that price, thank you very much. So it's rejecting any lower price because people do want to buy it. And so if you get this history of it, oh, I'll buy that, and then, oh, I'll buy that, and next higher price, you get this kind of pattern forming where this thing is discovering its natural price higher and higher. And certainly with Bitcoin being quite special, it's a market that's not at saturation. Publicly traded markets, commodities, gold, anything you can think of in the traditional world is at saturation. It's done its full penetration of its market base, people trading it, whereas Bitcoin, of course, is in this hyperbolic curve upwards as people adopt it. And so we're currently something like 50,000 more people that you can see on the blockchain per day coming in to buy it for the first time. So that means probably around 150,000 people all told, including the exchanges. They'll probably be seeing 150,000 people per day right now coming in. So obviously you've got these hordes of people coming in to buy it, and every dip you get, they're buying it. So you get these you'll see this sort of upward moving. Every dip is brought up higher, and that would be explaining this particular triangle within Bitcoin. You can scare wall people. I call it a scare wall. So essentially, you put a big sell order, and it's this big wall of death, right? And so particularly if you're a trader, you're going to buy the derivative, and you're going to buy it thinking, okay, I'm going to buy it here, and the price is going to rip upwards if it's a long position, and then I'm going to sell slightly above that, and I'm going to cash home. But when you suddenly see this big wall of death saying, I want to sell $10 million or $50 million or $100 million of Bitcoin, right at the price below where you bought, you're probably going to get scared, because that free run upwards is probably less likely to happen, because there's got to be someone that's going to take out that wall by buying $100 million of Bitcoin. And you might just decide you're going to exit your position. And you might, as you exit, that's called selling, right? Because you've just bought it. So that, like, someone who's got a large amount of capital, and these are derivative markets too. So say I've got like $10 million. That's a very small fund. It's a very small hedge fund. And say I leverage it up 10x, which you can easily do in, Binance, FTX, BitMEX, all these derivative exchanges. You can go 10x with that kind of sizing, trading 10 million. So suddenly you got 100 million of sell power.
So is that why sometimes then the price suddenly flies up as well? Because it then just eats through the orders above it?
Yeah, because someone pulled the wall and everyone just FOMOs in and goes, oh, it's gone. That means they gave up. Let's enter our long positions, and everyone starts buying. So it's kind of a bit of a crazy game.